So, welcome dear students. Hope you all are doing well and you might have practiced the different adjustments, what I mean say the different profit and loss account and the trading account, what I taught. Now, in this session, my focus is to teach you the various adjustments, the different adjustments we are going to learn. As I told you that whenever we do an account, that is final accounts, we have to do adjustment. And what do we mean by adjustment? That we have to learn now. And what are the principles of adjustment? What is the rule of adjustment? All that we are going to learn in this particular session. And along with this, you have to solve the problem. In the previous sessions, I have just shown you the posting. Today, in this session, I'll teach you all the adjustments, and in the upcoming session, I'll discuss with you how to solve the problem. So, what do we mean by adjustment? You know that every business organization, there are number of transactions which we may not be able to record or which we may not be able to post because of some other reason. But according to certain accounting concepts and conventions, we have to follow those concepts and conventions so that we can show a correct picture of the business organization. So, there will be few transactions which may relate to income or expense, and that we have to bring into the books of accounts. Those transactions which we are supposed to bring into the books of accounts, in order to show the correct picture of the business, that is to know the correct profit or loss, then those items which we bring into the books of accounts, we call them as adjustments. We call them as adjustments. And those adjustments are to be recorded through entries, journal entries. And those journal entries, we call them as adjusting entries. If you recollect, in journal proper, you might have learned opening entry, adjusting entry, closing entries and all. Like that, here adjusting entries for adjustment. Then, what is the principle which we follow while we give adjustment? The first principle is we follow the dual aspect concept. In the sense, every debit has a proper credit, we told. In the similar manner, keep in mind, dear students, that every adjustment, it has two effects. Always, every adjustment, it should be represented by two effects, that is twofold effect we call. One will be debit effect, other will be credit effect. That is, one, it will appear in the trading or profit and loss account, and one, it will appear in the balance sheet. If you see two effects, one in the trading or profit and loss account, as the situation may be, and second, it will come in the balance sheet, whether it may be asset or liability. Like that, every adjustment will give twofold effect. Then, what are the purpose? Why we have to do the adjustment? Then, as I told you, for the first purpose is we want to know the correct picture, that is true and fair view of the profit earned or loss incurred. Similarly, the second purpose, it is financial position. That is, we want to know the assets and liabilities. So, we give the adjustment. Then, here are the important adjustments. As I told you in the previous session also, about 15 adjustments you can see. The first one is closing stock, outstanding expense, prepaid expense, accrued income, income received in advance, depreciation, bad debt, provision for bad debt, interest on capital, interest on drawings, discount on debtors, discount on creditors, goods distributed as samples, goods used by businessmen for personal use, goods destroyed by fire, and managers' commission. These are the few important adjustments. Every adjustment I am going to discuss. Each and every adjustment I am going to explain you now. Now you see how to give the first adjustment called closing stock. What do we mean by closing stock? Knowing the meaning is important. Nothing but it is the stock which we are not able to sell, which remained unsold. And this stock which remained unsold is called closing stock, unsold stock, or stock in trade. And according to the accounting concept called the prudence concept, we value it at cost price or market price, whichever is lower. In the sense, if you are given with two values for the closing stock, let me say 20,000, 30,000, lower value, that is 20,000 will take. And for that, what is the adjusting entry? Adjusting entry for closing stock is closing stock account debit to trading account. Then how we are going to give the effect? If you look at the effect, you can see two effects I told you, and the first effect we are giving at asset side, and second we are showing at credit side of trading account. You can see very clearly I wrote, show the amount of closing stock at asset side of balance sheet. Second, show the amount of closing stock at credit side of trading account. Students, I'll be happy if simultaneously you can copy it also. Then, this is the closing stock. Then comes the second one, outstanding expense. What do we mean by outstanding expense? Outstanding expenses mean those expenses which we have incurred, but we have not paid. We have not paid. How to understand? Let me say, for example, for the month of December, we are supposed to pay salary in the month of January, but due to some reason, we were not able to pay the salary in the month of January. So, in the month of January, for December, the salaries are outstanding. Like that rent, in the sense, any expense which we have not paid are called outstanding expenses. One single word, expense not paid, are called outstanding expense, which are also called unpaid expense or expense due. And these are accounted on accrual basis of accounting. What is the journal entry for this? Expense account debit to outstanding expense account. And how the effect will be again? We'll show the amount of outstanding expense at liability side of balance sheet, and we have to add the amount of expense to related expense at trading or profit and loss account, as the case may be I told. Say for example, if I say wages outstanding, what is the entry then I'll write? Wages account debit to outstanding wages account. Then I'll show in the liabilities and I'll add to the wages. Where are wages? In the trading account. Similarly, let me say, if they give you outstanding salaries, then you know salaries account debit to outstanding salaries. Where we'll add that? We'll add the outstanding amount in the profit and loss account. Like that, depending on the item of expense to which account it belongs, in that account you are supposed to add or show. Then comes the third one called prepaid expense. Prepaid expense. What do you mean prepaid expense? Nothing but those expense we have paid already. In advance you paid. Actually they are relating to next accounting year, but you have paid in advance. Those expense are called prepaid expense or unexpired expense. Already paid in advance. They are for the next year. Say for example, you know you have to pay salaries to your employee Even next one, what you did in the month of December only you paid for January and February also. Like that it becomes prepaid expense. Like that insurance, we know we have to pay policy amount, premium amount. So what we'll do in advance, we'll pay and keep. So those expense which we pay in advance, but actually it relates to some other accounting year, we call them as prepaid expense. So adjusting entry will be prepaid expense account debit to expense account. Then effect, you see, we have to show the prepaid expense at the asset side of balance sheet, and we should subtract from the related expense. Say for example, if I say prepaid rent, then you will subtract from rent. If I say prepaid wages, you will subtract from wages in the trading account. Like that, the adjustment for prepaid expense, it comes. Then comes the next adjustment for accrued income. What do you mean by accrued income? Nothing but this is the income which we have not received. In the sense, it has to be received. We haven't received it. It is yet to be received. We have earned it. It is due from someone. It is not been paid, but we have to receive. Our business has to receive. That is called accrued income, or sometimes we call it even as outstanding income. Then what is the adjusting entry? Accrued income account debit to income account. Say for example, if I say accrued interest on investment, then the entry will be accrued interest on investment account debit to interest on investment account. Then what is the effect? One, I am going to show at asset side of balance sheet, and I'll add to the related income. Related income. If it is interest, I'll add to interest. If it is commission, I'll add to commission. That too where? On the credit side of profit and loss account. These effects are very important. Then comes income received in advance. Already we have received in advance. In previously we saw we haven't received. But sometimes in advance we will receive. And those incomes which are relating to some other accounting year, but we have received in the current accounting year only, are called income received in advance or unearned income. Adjusting entry, income account debit to income received in advance account. It's for next year. It is for next year. In the sense we got already in advance, thereby it is a liability. So first effect will show in the liability. And in the second effect, will subtract from the income for this year, because it is for next year. So here we want to know the correct profit, so we'll subtract from the income. That too on the credit side of profit and loss account. Then comes depreciation. What do you mean by depreciation? It is nothing but it is a gradual decrease in the value of fixed asset. So whenever we purchase an asset, fixed asset, let me say building, machinery, plant, we'll be using it. And because of its usage and passage of time, it will be reducing in the value, which is called depreciation. And this is recorded on the basis of historical cost concept. Historical cost concept that we have studied in accounting concepts and convention. What is the adjusting entry? Depreciation account debit to fixed asset. Say for example, if I am going to depreciate machinery, then I am going to write the entry depreciation account debit to machinery account. And first effect where will show? Will show at the debit side of profit and loss account. What will show? Amount of depreciation. They'll tell 10%, 20%, 5%. That we have to calculate. How to calculate? Then the asset value into rate divided by 100. That I'll show you in the problem when I teach the calculation part. Then we have to reduce it. We have to subtract it from the asset in the balance sheet. Then bad debts. What do you mean bad debts? Bad debts are the amount which we cannot recover from the debtors. In the sense, let me say we have sold goods to some customers, and those customers, they did not pay the amount. Then it is a bad debt. In the sense, it's a loss to us. Thereby, we are going to account the bad debts through debtors only. That is bad debts account debit to debtors account. Where will show bad debts? First, we'll show the amount of bad debts in the profit and loss account, debit side. And second, here, very carefully, you have to subtract from debtors. Keep in mind, you have to subtract from debtors. Then comes provision for bad debts. Provision for bad debt. It is also called reserve for bad and doubtful debt. So you know that prudence concept, like closing stock, here also we follow prudence concept. What is the subject of prudence concept? Always you cannot expect profit. Always we cannot expect profit. We should be little bit conservative also. In the sense, we have to estimate even the expected losses. Expected losses. In the business, we can expect losses also. So the concept says that make necessary provision, assuming that there may be loss in the business. On whom? From debtors, like bad debt. So any provision which we make expecting a loss from debtors, we call it as provision for bad debts or reserve for bad and doubtful debts. We are not sure they will pay or not. We are keeping some reserve. So the entry is profit and loss account debit to provision for bad debts account. And this provision should also be calculated on debtors only, dear, not on anything else. Debtors only. And as usual, we'll show on the debit side of profit and loss account, and credit will subtract from debtors. Now regarding this, sometimes they'll give you in the trial balance also. Okay, there are many other ways to do. Simple logic I'll tell. Whatever provision for bad debts is given in trial balance, blindly post it to the credit side of profit and loss account. And new one what you are calculating, you can put on the profit and loss debit side. You need not break your head thinking new one, old one, all that are given. No, simple way you can do the provision for bad debt. Then comes provision for discount on debtors. We are making some provision for discount, thinking that we may give the discount to the customer. For that also we are making provision. So again it should be calculated on debtors, and then we have to subtract from the debtors and show at debit side of profit and loss account. Now here let me make one thing very clear to you. Generally there are three adjustments on debtors here. One is your bad debt, second is your provision for bad debt, and third is discount. This will go in sequence. First you should subtract bad debt. If they ask you to calculate provision, after subtracting you should calculate the provision for bad debts. After subtracting provision for bad debts, whatever amount is left, on that you should calculate discount. Sir, only directly they give discount, then directly on the gross amount you can calculate. Then comes the next one, provision for discount on creditors. What we'll do with the provision for discount on creditors? Entry you can see provision for discount account debit to profit and loss account. So it's a sort of income. We are expecting it to be a income. So first we are going to show it on the credit side of profit and loss account, and we'll subtract from creditors. Where creditors are? They will be in the balance sheet on liabilities side. Then comes interest on capital. Whenever they give you interest on capital, this particular interest on capital, for this the adjusting entry is interest on capital account debit to capital account. On which amount we should calculate? On capital amount. Fixed percentage, they'll tell 3%, 4%, we'll calculate. Then effect 1, where you are going to show? Will show the interest amount first at the debit side of profit and loss account. And second effect will show on, that is will add to the interest on capital. If you all remember, when I taught you the format of balance sheet, there I was focusing that we have to add interest on capital. Then comes interest on drawings. Nothing but if at all, if the owner is withdrawing cash, goods, anything for his personal use, we call drawing. On that, we'll charge interest. And that interest is called interest on drawings. What is the entry then? drawings account debit to interest on drawings account. To interest on drawings account. Now you all may be thinking, why sir did not write 2 here? Actually in India only we use 2, by and all. If you go to foreign countries, they won't use 2 and by here. Just to make you understand, I have used here. Okay, but according to Indian standard, we'll write 2 interest on drawing. Then, what is the effect? The effect is, it is a sort of income for the business. So, we'll show at the credit side of profit and loss account. Second, we have to subtract from the capital. Please keep in mind, we'll subtract from capital on the liability side of the balance sheet. Then, sir, on what we should calculate the interest? Whatever drawings amount they give, on that we'll calculate the interest amount. Then, goods distributed as samples or charity. What the business will do sometime to promote the sales? They'll give free samples. Or out of their goodness, generosity, let me say some of them they are coming and asking for goods. They'll distribute the goods. That time, if they give as samples, we call advertisement. If they give in the form of donation, we call as charity. And that we have to account with the adjusting entry called advertisement account debit if it is for samples. If it is donation, you can call charity account debit to purchases. And what is the effect? First thing, we'll show whatever we have distributed as advertisement or charity, we'll show in the profit and loss account debit side. We'll show on the debit side of profit and loss account. Like you can write to advertisement or charity. Then second, we'll subtract it from the purchases at trading account. We have to subtract from purchases. Be careful. We have to subtract from purchase at trading account. This is goods distributed as samples. Then sometimes the goods are destroyed by fire. When they are destroyed by fire because of some reason, then 3 situations will arise now. 1, they are fully insured. Second, they are partly insured. And third, they are not insured. When they are fully insured, means we have taken a policy for full amount. Then, how to give the effect? First, we'll show at the credit side of trading account, like by loss by stock of goods. Or you can write by goods destroyed by fire. Then, since the insurance company said they are going to give you the claim, you are going to receive amount from insurance company, we'll show it on the asset side as insurance claim. Sometimes partly insured. Let me say only we have taken policy for 5,000, but the goods destroyed are 10,000. So we may not get full amount. In that case, how will we do? Then as usual, first the loss of stock will show at the credit side of trading account with full amount 10,000. Then insurance company said they'll give 5,000. That 5,000 will write as asset. Will show on the asset side. And the remaining 5,000 which we are not going to recover from the insurance company will show as loss. And that will show on the debit side of profit and loss account. Then when goods are not insured only, they are not at all insured only, we did not take any policy, then it is a full loss. So first you show on the credit side of trading account, and whatever loss is there, 5,000, 10,000, whatever, will show at the profit and loss account. Then we are taking goods for personal use. There we saw we have taken for charity or donation or advertisement or sample. Here personal use means for self-consumption. Owner is taking. Then drawings to purchases account. As usual again, first we'll subtract from the purchases, and second effect we'll subtract from capital. And then comes the next adjustment, last adjustment, manager's commission. There are 2 situations. Why we pay manager's commission? Nothing but if we want the manager to work more. If you want him to encourage, then you'll give commission to manager so that you'll work more and your profits will increase. Then there are 2 ways to give the manager commission. One, you can see net profit before charging such commission, and one is after charging such commission. Generally we calculate on net profit. So how to calculate? There is a formula here. manager's commission. If they say before charging such commission, you can see before I wrote in capital letters. That was important. If they say before charging commission, then how to calculate commission? Net profit into rate of by rate of commission. 10%, 12%, whatever they say, will divide by 100. Commission is equal to net profit into rate of commission divided by 100. Then if they say after charging commission, formula will be same. Only thing is in the denominator when we'll divide 100 plus rate will write. 100 plus rate of commission. If they say 10%, then it will be 10 by 110. If they say 20%, 20 by 110. On what, sir? On the net profit. Then what is the effect? The effect is we have to show the commission on the debit side of profit and loss account, and we'll show commission on the liability side of the balance sheet. These are the adjustments with their effect. So sometimes what will happen? Few adjustments, like you can see, they will be given directly in the trial balance. They will not give as adjustment. When they are not given in adjustment, we cannot show two effects. They should be shown only with the one effect here. And that, what are the common items we come across? If they give you closing stock in the trial balance itself, then it should be shown only on the asset side of balance sheet. Nowhere else. Only on the asset side of balance sheet. Like that, if they give outstanding expense, let me say outstanding salary, they gave you in the trial balance, that is on the credit side, then directly show as the liability in the balance sheet. Like that, prepaid expense, only at the asset side of balance sheet. This will be given on the debit side of trial balance. Like that, accrued income, you have to show on the asset side of balance sheet. Like that, unearned income, nothing but income received in advance, that is other name, you have to show on the liability side of the balance sheet. Like that, if they give you depreciation in the trial balance, will show only on the debit side of profit and loss account. Interest on capital will show on the debit side of profit and loss account. Interest on capital will show on the credit side of profit and loss account. These are the 5-6 items which examiner may give you in the trial balance. If they are given in trial balance, no two effects, only one effect. You can see, accordingly you have to give. So, having said this about manager's commission and all, I expect you all to revise the adjustments thoroughly. And once again, I am showing you all the slides of the adjustments here. You can see I am going in a reverse manner. You can have a look thoroughly. Of course, these are not important. I am just skipping off the most important ones. You can see from here, bad debts, compulsory adjustment. These are the 5 which you are going to get in the exam. Bad debt. I request you all to concentrate on the effects more. How I have written, focus on those. Depreciation, accrued income, prepaid expense. These are the compulsory adjustments which we are going to have for exam in the final accounts question. Every adjustment has twofold effect, I told you. Outstanding expense, closing stock, outstanding expense, prepaid expense, accrued income, income received in advance, depreciation, bad debt. These are the main adjustments for this academic year. Thank you, dear students. In the next session, we'll meet with the problems. Till the time, have a good day and revise perfectly.